Hola, Accounting 201. We are going to start Chapter 3, the Accounting Information System. This chapter is very important for you to be able to understand all the information that we're going to go over. We will have 3 PowerPoints, and this is Part 1. In this PowerPoint, we are going to analyze the effect of business transactions on the basic accounting equation and explain what an account is and how it helps in the recording process. The system of collecting and processing transaction data and communicating financial information to decision makers is known as the Accounting Information System. Factors that shape the Accounting Information System include the nature of a company's business, types of transactions, the company size, the volume of data, and information demands of management and others. Most businesses use computerized accounting, which is called EDP, systems. Transactions are economic events that require recording in the financial statements. Not all activities represent transactions. If I were hiring someone for my business, that would not represent a transaction. It is only a transaction when it affects the assets, liabilities, or stockholders' equity. There are also some examples of external events. These are the purchase of equipment, payment of rent, payment of utilities, payment of supplies and wages. You could also have internal events, the cost of supplies used, the cost of buildings and equipment used or depreciated. We also call this a dual effect on the accounting equation, or sometimes double entry accounting. In other words, it's going to affect 2 different accounts when we have the transaction, at least. It might be 2 or 3, but usually it's 2. Are the following events recorded in the accounting records? Before it can be recorded in the accounting records again, we need to ask the question, which is right here, is the financial position, assets, liabilities, or stockholders' equity of the company changed? So on the first one, if you purchase a computer, it's going to affect cash, isn't it? Cash is an asset. It's also going to be a computer. Computer is an asset. So we would record this. If we discuss guided trip options with potential customer, that's not going to affect any of these accounts, assets, liabilities, or stockholders' equity. So we will not record it. Paying rent, does that affect asset, liabilities, or stockholders' equity? Yes, it does. It affects cash in the assets and stockholders' equity, the expenses. So yes, we would record that one. Analyzing transaction. The process of identifying the specific events of economic events on the accounting equation. The specific effects of economic events on the accounting equation. So let's refer back to the accounting equation, which is assets equal liabilities plus owner or stockholders' equity. We will keep that in mind when we go to process the transactions. This shows the expanded accounting equation, and we are taking into account how stockholders' equity is actually broken down. We have common stock plus retained earnings, and then we have these 3 things under retained earnings. We have the revenues, expenses, and dividends. We will go through some transactions now to help you understand how transactions affect the accounting equation. Number 1, on October 1, cash of $10,000 is invested in Sierra Corporation by investors in exchange for $10,000 of common stock. The most important thing you need to do when you're analyzing transactions is to first of all decide what accounts are affected, how they're affected, if they're increased or decreased, and then you can go ahead and record the transaction differences. So looking at this transaction, we have cash of $10,000 is invested, so that's going to be an increase in cash in exchange for $10,000 of common stock. So that's going to increase our common stock. These two are on opposite sides of the equation. Notice they have the same, the positive. That's going to help us determine that we have done it correctly because assets always equal liabilities plus stockholders' equity. So $10,000 equals $10,000. On October 1, Sierra borrowed $5,000 from Castle Bank by signing a 3-month, 12% $5,000 note payable. We are going to forget about this part right now because we're going to pay the interest later. So they borrowed $5,000 from Castle Bank, so that's going to be our cash. It's going to increase because we have more money, and the note payable means we are going to have to pay this off later, so our note payable also increases. The transaction would look like this. Again, if we add the two sides, 15,000 equals 15,000. On October 2nd, Sierra purchased equipment by paying $5,000 cash to Superior Equipment Sales Company. The accounts that are affected, we have our cash, and we're going to use equipment because we are paying cash for the equipment. Equipment increases because we have more equipment. Whenever you pay cash, cash comes out of your pocket, you have less cash. It's the same way with a business. So on this one, we subtract the $5,000 from cash, add it to equipment. If we were to add these up, it would still be 15,000 equals 15,000. Notice when it's on the same side of the equation, one is going to be a minus and one will be a plus. 4. On October the 2nd, Sierra received a $1,200 cash advance from R. Knox, a client. The accounts that are going to be affected are cash, and this was an advance, so we're going to use unearned service revenue because we have not earned it yet. Our cash increased, and so did the unearned service revenue. 5. On October 3rd, Sierra received $10,000 in cash from Copa Company for guide services performed. So again, we have cash. We increased it because we received it. And then services is the other account that we are going to increase. On October 3rd, Sierra Corporation paid its office rent for the month of October in cash, $900. So the accounts that are affected are going to be the cash account and rent expense. Paying cash decreases how much cash we have, and then we have to subtract the expenses over here, so they will both be minus. They're on opposite sides of the equation, so it will still equal. 7. On October 4, Sierra paid $600 for a one-year insurance policy that will expire next year on September 30th. Since we are paying in advance for the insurance policy, it becomes an asset. We are paying $600 cash, so we will have to decrease our cash. Notice they're on the same side of the equation. Subtract the cash and add to the insurance. Keeps things equal. On October 5th, Sierra purchased supplies on account from Arrow Supply for $2,500. So we are increasing our supplies because we purchased supplies, and we also increase what we owe because it's on account. So that would be our accounts payable. On October 20, Sierra paid a $500 dividend. When they pay it with cash, it's going to decrease our cash, and it will also decrease the dividend that we owe. 11. Employees have worked 2 weeks, earning $4,000 in salaries, which were paid on October 26th. Our two accounts, we're going to have cash because we paid the $4,000 in salaries, and salaries expense is going to be our other account that's affected. When we're all finished, if we add up each account and create their balance here at the bottom, when you add up all of your assets, it becomes $23,300. When you add up your liabilities and stockholders' equity, it is also $23,300. So our assets equal liabilities plus stockholders' equity. That is another check you can do when you're finished with your problem. We are going to complete Do It Problem 3-1 from page 138. The transactions made by Leonardo Bloom Company for the month of March are shown below. Prepare a tabular analysis that shows the effects of these transactions on the expanded accounting equation similar to that shown in illustration 3.3. So I have created this down here. We have assets equal liabilities plus stockholders' equity. And then I broke it down to the retained earnings. I put common stock plus revenue minus expenses minus dividends. So ours looks similar to what they had in your book. Transaction number 1. The company provided $20,000 of services for customers on account. The first thing we do is we decide what accounts are affected. We have $20,000 and it's for customers on account. So the transaction would be to increase our accounts receivable plus our revenue. Number 2, the company received $20,000 in cash from customers who had been billed for services in transaction 1. Well, the accounts that are affected are cash and accounts receivable. We receive cash, so it's going to increase cash, but it also decreases what people owe us in accounts receivable. Number 3, the company received a bill for $1,800 of advertising but will not pay it until a later date. Because they are not going to pay it until a later date, it becomes accounts payable, and then we will have advertising expense. So our transaction will be to increase our accounts payable, and then we put the minus expenses there because we subtract our expenses. And the last one, Leonardo Bloom Company paid a cash dividend of $3,000. The accounts that are affected are cash and dividends, and the amount is $3,000. If they paid cash, then it's going to decrease our cash. It's also going to be a minus on the dividends. When we go to total our different accounts, we can find that 17,000 plus 0 is going to equal the 1,800 plus 0 plus 20,000 minus 1,800 minus 3,000. So we have 17,000 here, and if we take 20,000, if you take the 1,800 minus 1,800, that's going to be 0, and the 20,000 minus 3,000 is going to equal 17,000. So your problem equals. The assignments I'd like for you to complete are exercises 3.1, 3.2, and 3.3. Hope this helped you understand.